Hello and welcome to another update video about Natgas. I have zoomed out a little bit to show you the movement of the swing high that was made in June 22 again, which I count as a wave 1. And we then had an A wave, a first wave of a correction which bottomed in October 22, a B wave rally, and now the C wave to the downside, which is a 5-wave move. And I have a wave 1, I have a wave 2, I have a wave 3, I have the wave 4, which is currently happening, and the wave 5. I just thought it might make sense to show you that again for anybody who hasn't seen previous videos in which I have shown this. Now, there are other ways how this entire correction can be counted, but it doesn't really make a difference to the analysis. And that also shows you why this is sort of the broader target range here for this current wave 4 correction. These are the retracements that are normally relevant for a wave 4. $3.15, $3.91, and $4.52. These are the retracements if you draw them from the beginning of the third wave down, which again bottomed here around $2, just below that. And they give you the relevant retracement levels. Typically in a wave 4, the ideal target is $3.91. So it would be great to get there eventually. If we now take a look at this fourth wave, we've been talking about that now many times. We see it as a flat structure, a so-called flat, that's a sideways correction, where we have an A wave, a very deep B wave, and a C wave. Unfortunately, two things. First of all, a wave 4 is typically the wave that bores everybody out. It's a very, very boring wave. I mean, don't be surprised. I mean, you can get corrections over time, and you can get corrections over price. The problem is, in a wave 4, you often get a correction over time, and you get a flat correction. The name is already saying it all, flat. It's a sideways correction, which is extremely boring. And also not the most easy wave to analyze, okay? And the wave 3 was very strong. It was very sharp. It didn't really have much structure, but it was the longest wave, the third wave, and the fourth wave is naturally very long because the third wave was also so long, and it takes time to correct all of that, and the market doesn't seem to be very motivated to correct this move over price. So we don't see a very aggressive rebound as we have seen it before. That was quite aggressive, this rally here. Here they were all corrective rallies. The problem is this is just a correction over time, so it's so boring. And if we take a look, for example, just taking a look at maybe the 4-day chart, right? Where are we? Here. Now you can see how long it took to bring that RSI higher again. It was completely oversold, but you see that happens over time. So it is very boring. That's what a wave 4 is, so don't be surprised. I think the wait is worth it. If this kicks off bullish again, and it will do, then wow, I mean, this can go up significantly. It's a very volatile market normally, Natgas. You see that in the short term anyway. It's very choppy, that price action. That's also not a surprise because we've been talking about this being an ending diagonal. Anybody who's familiar with Elliott wave, you know that diagonal structures, they are characterized by corrective wave structures. So, and these are typically very choppy, very corrective, overlapping price action, unexpected twists and turns on the micro level. So you shouldn't really try to analyze every single wave. There's no point. However, it is slowly going higher, and that's the key. So at the moment we have no evidence that this correction is finished. It would still suggest higher prices. Ideally, we would break out of this price channel to the upside at some point. That would be great because, in my opinion, this third wave, I mean the C wave in this correction, ABC, the C wave consists of 5 waves. In my opinion, we are still in the third wave, and there should still be a 4 and a 5. And in this third wave, we have completed already an A wave, a B wave, and ideally we're now in the C wave. And here potentially we're just sort of turning around to rally in the third. But bear in mind, this looking at the microstructure here is all a bit wait and see. I'm seriously looking forward to price action where we can really be more predictive, because in a corrective structure you can't really. So we're just simply tracking it at the moment. tracking those trend reversal areas here. This one worked out twice. These are setups, yeah. This one worked nicely a couple of times, 3 times actually, a couple of times. So waiting now, yeah, basically just for it to go higher. Just for it to go higher. Below 229, we may have to readjust. Because then we would break below the 78.6 fib level of this move up. And that, in my opinion, would change course and could send price down lower more directly in the 5th wave. Because don't forget, even though we are currently in the 4th wave, so we would still expect another move down in the 5th wave afterwards. In an alternative interpretation, this entire correction already finished here, but it's not my primary path. It's not my primary scenario, because if you see all of that and you see the length of the 3rd wave, it's very unlikely that the 4th wave already finished here and the 5th wave here, because this would be unusual for the beginning of a rally of a 3rd wave. But never say never, but it would be an alternative. Yeah. Either way, we are very close to a lasting low, in my opinion, price-wise. Now, this can take a while to complete this correction, right? But a break below 229, in my opinion, would confirm the beginning of the 5th wave, or at least would confirm to us that the wave 5 is unfolding. But until then, I expect short-term higher prices to complete this 4th wave, ideally around the area of $3.91. Yeah, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.